Until today, China's currency was tightly monitored and was only allowed to fluctuate within a narrow, predetermined range set by the central bank. But this morning, that all changed. In a shock move, the People's Bank of China announced it was letting market forces play a bigger role in valuing the yuan. Instead of the PBOC setting the midpoint of a 2% window in which the yuan could move, now that midpoint is based on the previous day's closing price. The policy change meant a one-time yuan devaluation of 1.9%, according to the bank, because the key midpoint value had been divergent from the market rate for some time.
The market has been calling for some reform to the fixing mechanism for some time, and actually we ourselves has been calling for such reform to happen within this year. So there was always, I think, an expectation that the PBOC will eventually do something to make the fix more market-driven and more transparent.
Now, some will claim China is weakening its currency intentionally just days after poor export data signaled another headache for its slowing economy. And the United States has long accused China of keeping its currency artificially low to help its exporters. But China's central bank says this move is part of reforms designed to have market forces have more influence over the yuan. That could boost China's campaign to have the yuan included in an elite grouping of currencies used by the International Monetary Fund. To be included alongside the dollar, euro, British pound, and Japanese yen would lend major prestige to the yuan, a currency already being used more and more in global transactions. Stephen Zhang, CNN, Beijing.